Alright guys, welcome back to a part 2 of the same video, which is for February 7th, 2011. Now let's go ahead and review this. First of all, this is the ProShares Ultra Short 20 plus year Treasury Bond Fund. Now pretty much this is the type of fund that goes up when the Treasury bond market goes down in value. Basically, higher interest rates on bond yields means this fund will go up in value. If the interest rates on bonds go down, this is a type of fund that will go down in value. And remember, when the interest rate on a bond goes up, that means that the value of the bond itself has actually gone down. So if it actually goes down in value, which would require the interest rate to go up, that in turn would cause the ProShares Ultra Short 20 plus year bond fund to go up in value. And this is a bear fund, so just keep that in mind. It's short on treasury bonds. Now that you got a basic idea of what this fund is, people suggested buying into it. Now I do want to point out that there are some key things you do want to look for. First of all, the bond market does trade in the opposite direction of the dollar index. It has an inverse correlation during periods where there is no instability around the world. Now when there's something major going on, like for example, if I were to go back to Egypt and how all this chaos was erupting and stuff like that, people got fearful, and what they did was they fled into safe assets like the US dollar and the treasury bond. And that only happens during specific periods of time, and only during periods of time when there's a lot, and I mean a lot of uncertainty, guys. So you guys got to be very careful. And now here is my main thesis or point. First of all, the dollar index continues going lower, which chances are it will. It has a pretty negative trend. I mean, the monthly and the weeklies still point out a very strong downtrend. It still has lower lows and it has lower highs. This high hasn't been able to break this previous high. We're still dealing with the double topping pattern. If this falls, bond market will go up in response. And remember, if you look at a day's trading, when the dollar index was up, bond market was down. When the dollar index went down, the bond market went up. Okay, so you guys see that inverse correlation. It works more than 50% of the time. So the odds favor those who short the ultra short bond fund than it does to buy into that ultra short bond fund. You guys get the drift here, is that overall I feel that this short-term run-up is going to be temporary, and it could be fueled by another pullback. As the dollar index goes lower, stocks go higher, and bonds, they kind of meander in a sideways pattern. But remember, dollar index goes down on a day's trading session, bond market generally goes up. So chances are you'll see the bond market have somewhat of a bid put back into it. But once the dollar retains some of its value, then of course you'll see the bond market go back up a bit. So end point, gotta be careful of this. I wouldn't buy into it right now in light of what's going on. And also another key point is that if you see the dollar index go substantially lower, you'll see the bond market go substantially higher. And there is no economic news, so there's nothing to be driving any event. There's no event driving the bond market at this point. Unemployment reports aren't coming out. There's nothing really major this week. So the only thing you can really see from the bond market is pretty much the inverse correlation with the dollar. If there is if there's a key economic data that's coming out and it comes out very, very well, which there really isn't for this week, then you'll see the bond market pull back and stocks go a little higher because bond investors will be like, hey, people are going to sell their bonds and buy more stock in light of this. But right now, we don't have any key economic events. Bond market overall, don't buy. Probably a good short on the ProShares Ultra Short 20 plus year, which is kind of ironic. Let's go ahead and look at the next chart, which is going to be the VXX. Now, I do want to point out the fact that this is another inverse ETF. And I do want to point out the fact that if the stock market falls, this ETF will go up. But if the stock market rises, this ETF will go down. And it will go down by around 3 times more than your typical index fund, like the SPY. Now, I do want to point out the fact that I did make 2%, surprise, surprise, today. and I more or less closed it, a couple hours into the trading session. It was a pretty good trade. I mean, I shorted it into Friday, I held it overnight, and I felt that, markets, they're going to be pretty weak on Monday. Well, no, they're going to be pretty positive on Monday. That's just how Mondays generally are in this type of market environment. And because of that, I feel that the VXX would be a great short. Lo and behold, VXX continues going lower as the market continues going higher. And when I mean market, I mean the general stock market, like the Dow Jones Industrial Average. Now, I do want to point out a key thing here, that there's nothing major coming out of the world. If there's something that the Federal Reserve really can't manipulate, so that, basically if things go beyond the Fed's control, you really won't have any major market pullback. Likewise, the VXX will continue its downwards trend, which would make it a very, very easy short to do. I mean, it just keeps going downwards. And, like I'm saying, the VXX will most likely continue its downwards trend as the stock market continues going a little higher inch by inch. Let's go ahead and look at the next chart, which is the family dollar. Now, family dollar, I do see some hope for it, fortunately. I do think that there might be a great long opportunity, and I think it's somewhere, give or take, around here. If I would go ahead and draw on the trend line, you're going to see that you have a great buyout opportunity right around here. Now, why here? The main point being is that you're going to have a great opportunity to buy right here and sell right here. Now, you guys want to watch out for these gaps. No, not right there. It's right here, right? You gotta watch out for these gaps. And it's generally this type of gap fill right around here that makes a great opportunity to go ahead and buy on the lower end of the support and sell around here. That would give you, give or take, around 20% profit. I don't know the exact time frame on a family dollar trade, but I would recommend you guys set somewhat of a tight stop, maybe around 40 bucks or something, and anticipate a trade somewhere around 48.50. That would probably be your target zone where you would take your money off the table. You wouldn't push the gap. Alright, you just take your money when you see that 48.50 level. Let's go ahead and look at the next chart, which is going to be American International Group. American International Group, very interesting. In fact, I was shorting it a little bit towards the end of Friday's session, but I felt that, this market is kind of pushing itself a bit. It's a bit oversold. I don't really want to push it, so I didn't really take my shorts over the weekend, and I more or less, and a good thing I did cover, because man, this thing flew through the roof on Monday. Whew. But anyway, what happened is that you had this market, it had a pretty negative day, and then it just surges upwards. Now, a little unexpected. How should we trade the AIG? Well, it is trading off of a major support level, off the 50-day moving average, or the 200-day moving average, actually. And, I did point out that this area of support was going to be key. So, right now, it wouldn't be a bad idea to buy into AIG. It is a bit of a contrarian play, but at this point, it wouldn't be a bad idea. It is a bit undervalued. AIG is turning itself around a bit, and also, it did go up to around $60. There's a good chance that it could go there and go beyond. Remember, it does have a lot of tangible book value, and tangible book value means a lot for investors who want to consider the likelihood or the prospects of them getting their money back in the case the company files for bankruptcy. Now, because of that, I do think that, like I said again, this chart does look pretty favorable for a buy-in at around $42.15. Let's go ahead and look at the next chart, which is Entropic Communication, or Entropic Communications, which is ticker symbol ENTR. Now, ENTR is a pretty interesting trade. I am anticipating somewhat of a bounce, give or take around $9.90. You watch this trend line very closely. If it goes a little lower and it touches this trend line, great risk to reward ratio. I would consider making a buy-in at that level. I do want to turn on the 100-day moving average, though. One second, and I'm just going to get this down to around 100-day moving average. Alright, so I got the 100-day moving average set. Alright, and pretty much I don't really see much support aside from the 100-day moving average down here a bit, and below that you have this key trend line, and I think that this trend line is going to be a very good level to buy off of. If you're trading on the short term though and you see it touch the 100-day, don't be afraid to go ahead and buy into it a bit, but remember, you got to be a little cautious with Entropic Communication. Best entry is going to be around this trend line. As you can see, it connects so many times over. It just makes sense to go in at around 9.90 for a quick bounce, maybe $1 or $2 bounce, and then you just leave the trade. Alright, let's go ahead and look at the next chart, which is China Precision Steel. Now, this is a stock I recommended back on Wednesday. It was trading, I think it was right around here when I recommended it actually, and it has already popped. It went up to around $1.70, and I was like, yeah, there might be some resistance at that level, which there was. It wasn't able to close above it, and today it went up and it had traded up right above it. It has gone all the way up to around $1.94. I actually bought into it, you know, give or take, like I think somewhere around Wednesday or something, or Tuesday in fact. I actually made like a couple percentage points off and I just sold it. I wasn't anticipating this. I was anticipating 170, but I wasn't anticipating something in the 190 or something like that, which would have been a great trade. You guys would have made quite a bit of money. And at this point, I would suggest you guys to take your profits off the table, as there is an inverse hammer. Inverse hammer, not very good. It does seem a little toppy at this point. Right now, it's far better to be safe than sorry. Take your money off the table. Reconsider a trade later on. Let's go ahead and look at another chart, which is Apple. And Apple did have a pretty good pop. And the main reason why I had a nice pop was because of the fact that its Apple iPhone was being released in Verizon stores, and today or Monday was going to be the first day that it was going to be released for Verizon. So obviously people were going to react to that a bit. So that pretty much means that Apple will continue earning much more money just because of the fact that they're going to have more exposure. More exposure to a bigger consumer base means more money for Apple. It could mean double the money that they're already earning off of an iPhone. So that being said, the Verizon network is just as big as the AT&T network. If the iPhone can be sold on the Verizon network, that is a huge boon for Apple, and that could result into a $400 to $450 stock in the coming year. Let's go ahead and look at the next chart, which is going to be China Southern Airlines ADR, which is basically a depository receipt. I think that this play has some great potential. I do like Chinese stocks. They do rally quite a bit, but this is touching so many support levels. I think that there's a great opportunity here. Obviously, you got this market going somewhat in a consolidating pattern. If you were to consider a trade, probably a stop at around 24.50 with a target of around, give or take, $28. $28 would be a great target, as it is the gap fill area. You would be risking, give or take, around 50 cents or so, or to maybe $1 or so, just in return to get around $2, maybe around $2 in return, which isn't bad. It's a 2-to-1 risk ratio, but I believe that it will touch that $28.50 area. So give or take, I think those are the trades for today that I want to go over, and thank you so much for going ahead and taking out some time to watch my video. Please be sure to subscribe if you're watching this on YouTube. If you're on Facebook, tell your friends about me so that they too can learn about these type of things. And if you're on Twitter, please retweet the link to this video because it could help someone else out there. Thanks a bunch, guys, and I'll see you guys next time.